Good evening to all our friends right here. Welcome down to Market Outlook. And yes, right here for today itself is almost coming to the end of June already. I believe that all of us are getting really excited, right? Because in 2 days' time, it's going to be marching towards a brand new half of the year for 2021. So 2021 itself is indeed a very, I would say, amazing year because everyone thought that COVID is already over, especially during the Chinese New Year time of February and all that. All of us are getting ready for the brand new year, making New Year resolution and all. But suddenly, things and economy went down the hill again, especially when India has a great outbreak and China as well. And of course, our very own Singapore is also going through a tightened alert. So right here for today, we are here to actually discover how will the market outlook be for Q3. And meanwhile, at the same time, we do have a special guest right here going through the first half of the year, that what's the thing that's going through, and at the same time, giving us a recap as well about the first half of 2021. So right here, let's pan the screen to the slide right now, and we'd like to encourage all our friends, do pen down all your questions. If you have things that you would like to find out about how the market will grow for the next half of the year, or there are things that you would like to ask about the past few months as well, do feel free to write it down to us as well. And meanwhile, bear in mind that later on we have 2 questions for all of you as well. What you need to do right now is to like and share our Facebook video itself, and later on you might be entitled to win yourself with a $10 NTUC shopping voucher. So with that, right now, we would like to welcome our guest right here. So he's none other than Jeff, which is actually from Hong Leong Bank itself. So he basically actually has a vast experience in terms of economics and investment, and of course, to talk about things like the global market and also local market as well. Okay, with that, right now, let's pan our screen itself and of course our attention to Jeff.
Yes, hi, good evening everyone. So really a pleasure to be here. So thanks for inviting me over to share my thoughts on the Singapore economy today.
Yeah, Jeff, I would like to know more about yourself. I saw that you have been around everywhere, right? Okay. Yeah, so in so many banks and all that. Do you study economics back in school?
Yeah, that's right. So I graduated as an economist from NUS, and then thereafter I went to do a master's in London.
Yeah.
And I've been fortunate to be working in many different companies so far of various kind of locations and in terms of their headquarters. And I think definitely they have provided me with a lot of experiences that I can feel free to share with everyone today.
I see. Okay, so you were actually also in things like Deutsche Bank, Stand Chart and all that. Are you doing the same role? But I noticed that right now you have 2 titles. You are strategist and a treasury as well.
Okay.
What does that mean?
Yeah, so currently I am both an economist and a strategist with HL Bank. So in my economist role, I do track the Singapore economy very closely along that of China. And for the strategist role, I look at various asset classes, but zoom in on FX most specifically. So, my previous experiences has also been on many similar roles, like being an economist with Standard Chartered Bank, looking at Asia, and also as an investment strategist with Deutsche Bank, looking at the various Asia asset classes for clients, and previously I was also at Robini Global Economics, which was rebranded as Continuum Economics, covering the whole of Asia and providing insights on Singapore and China too.
Yeah, so in the future, if you want to look into Forex, I think you're the right person to go to, yeah, before we must start buying and all that. Okay, so today's topic, let's take a look at the slide for today's topic itself. We're talking about vaccination in Singapore and first half trend and what we're going to expect for Q3, right? Okay, let's kickstart with the first chapter for today, where we talk about the COVID-19, which is something everyone has been talking about, and what's going to happen for the vaccination progress and the impact for Singapore's economy.
Okay, sure. So thank you so much. So today I'll briefly share on 3 main points for my presentation. The first is on the Singapore's and the global trends for COVID-19, with a particular focus on vaccination. Secondly, I'll talk about and have a recap about the Singapore's economic performance for the first half of 2021, and then we'll have an outlook ahead into the second half of this year, heading towards 2022. So if we look at how our Prime Minister Lee Hsien Loong have spoken about the COVID-19 new normal from on 31st May 2021. I think there's been a shift because from at the start of this year and towards the end of last year, I think a lot of us were expecting that COVID-19 will be a one-off. All of us will be vaccinated in 2021, and then COVID will just go away and things will be fine again. However, I think that's not likely to be the case. I think as PM Lee has mentioned, one day this global pandemic could subside, but he do not expect COVID-19 to disappear. It will remain with humankind and become endemic, which is likely to be more persistent going forward because the virus will continue to circulate in pockets of the global population in the years to come.
Yeah, so there's this thing, people keep saying things like what endemic kind of thing, right? So what does that actually mean? Does that mean that this pandemic going to become endemic and continue on in the whole world and just keep going on and on and on?
Yes, I think looking at the current situation, what is likely to happen is that COVID-19 is here to stay and it will continue to evolve. I'm no health expert, but being endemic means that I think the Singapore population and the global population do have to live with this pandemic for years and years to come. It will one day be very common like the flu, and we just have to live with it as the flu evolves. It will be similar. It will likely be similar for COVID-19 as well. So I think when we look at the global COVID-19 trends, I think what we have seen so far is that if we do a quick tally, there's been more than 180 million cases worldwide, with almost 4 million deaths so far. But I think there's some good news coming in. If you look at, for instance, the chart on the left-hand side, the vaccination drive globally is going under steam since the start of this year, with cases on a daily basis now much lower compared to the vaccination numbers daily. So I think the number of people getting vaccinated is outweighing the number of people getting infected by about 10:1 at this stage. I think mainly helped by the fact that there's been almost 3 billion doses given, with almost 800 million in the whole world being fully vaccinated. However, I think the current situation remains quite diverse and varying across different geographies. If you look at the map on the right-hand side, you'll see different shades for different countries and regions. So what we've observed is that those there are hotspots for COVID-19 continue to remain in parts of Africa, in South America, as well as in parts of Asia like Mongolia, India, and Malaysia. Whereas I think some of the other economies like the US, in Europe, the COVID-19 cases have definitely come down by quite a lot, even though now the situation continues to evolve. I think what we can conclude if we look at an individual regions kind of trends over time is that vaccines are effective in reducing infection rates. If you look at, this is a chart from JP Morgan, and looking at many of the major economies like the US and in Europe, as well as some of the economies that have vaccinated very fast compared to others, what we see is that the number of infections have come down per million on a 7-day average. I think they have been on the reduction as the number of population of people getting vaccinated reaches 40% and above. And I think that's showing that over time, all these vaccines have been helpful in curbing some of these vaccination rates as it progresses. Even though I think there's still a lot of new variants that will come up, and I think they're still likely to cause some of these changes in terms of the the infection rates over time.
So does that mean that more people are vaccinated, then the economy will come back faster?
Yes, I think one of the main takeaways when we look at all these charts is that there's a positive correlation between from the economic perspective, economic activities are likely to improve, as the vaccination rates start to improve as well, because they do help people to become more protected and insulated against the virus.
I think then people are getting more and more, willing to go out, right? Not so scared, like staying at home. Oh, I have to be like vaccinated first and kind of thing, right?
Yes, definitely. So I think, if we also take another angle into how we look at the factors that's shaping. So this is a chart that shows, comparing across different countries, economies, and regions across a single period of time. So I took this chart sometime in mid-June. So this compares, the number of cases per 100,000, which is a proxy for, the vaccination rate against the vaccination rate on the y-axis. So what we do observe is that, there are many factors that shape trend, and it's really inconclusive. Because for instance, some regions like Bahrain, Maldives, Uruguay, they do have a higher vaccination rates, but they do have new cases as well. So I think they do show the fact that certain vaccines or maybe the government's policy will likely shape the trends and infection rates. And I think if you compare, for example, the US and UK, so even though we've heard a lot of stories that they have been having less vaccination rates compared to the trends that was observed in the end of 2020, but I think if you compare, let's say, to the Singapore, the red dot on the chart, we do note that the number of infection rate is still lower compared to that of the US and UK. So I think this does show, the various kind of policies, the severity of circuit breakers or lockdown between different geographies, or the vaccines, the different brands, or the population's activity levels that could shape trends. And I think there was a very interesting, report from Bloomberg this morning, which I wanted to share with all of you today, in terms of Bloomberg's COVID resilience ranking. So what we have is Singapore here. All these are very small, but I think what we can see is that Singapore is ranked 13 out of the 53 economies and countries that they added into this list. And I think it's owing to the fact that I think Singapore continues to be one of the kind of economies that are still relatively well protected against COVID-19, and with a high quality of life, with many of the indices, I think, looking blue, which is positive. But I think where it didn't fare as well as the US, for instance, is that because we are a bit more stringent and a bit more conservative in terms of how we want to protect our population against these infection rates. So I see this report as being more of a comparison between how normalized we are in terms of economic activity levels, where the US is currently leading and Singapore is doing quite well, but it's constrained by the fact that, for example, there's no travel within Singapore for flights. So flights is like 80% down if you look at the chart. But for the US, they are not so much being affected, for instance. And Singapore continues to be very much vulnerable compared to and affected by all these global trends. But I think, if you look at the other economies that are in the bottom of the list, I think they are really suffering from high infection rates, very low vaccination rates, as well as, I think, still struggling with government policies to contain the pandemic so far. So another look here, and I think it does shows in some instance that some of the economies that have been doing quite well, like Taiwan, like Malaysia, which is now getting still suffering from the outbreak. I think they are continuing to trail on the back of lower vaccination rates, and I think some of these are likely due to the fact that they are unable to get some of the vaccine supplies. Whereas compared to, let's say, the US, where the number of people covered by vaccines is much higher, with also the lockdown severity, not as strict as the other economies. So, which is why I think the US continues to lead in terms of the ranking for now, at least, improving from, if you look at the chart on the right, there's been some reversal of fortunes where it came from a very low ranking towards being number one. But in contrast, I think Asia, many parts of Asia have ranked among the top 10 over the past few months, but because this for this month's ranking, they added how much of the reopening they have done so far, and Asia being more conservative in terms of how they have tried to protect the populations from infections, as well as the renewed outbreaks from the Delta variant. So some of these rankings have certainly come off.
Yeah, Jeff, actually, you know what I heard? I heard this very, very funny thing about US. The government in US, right, basically knows that the nation likes to drink beer. So in order to entice all of them to go for vaccination, they say that as long as you go for, vaccination, we give you money, we give you beer and stuff. So why is that kind of a thing that the government wants to push everyone to go for vaccination?
I think in the US, what they are very interested in is to get the vaccination rates very high. I think that's very similar to the strategy that Singapore is pursuing at the moment. And I think if you look at the US, they have also introduced like lottery, so you can
free lottery.
You can get a chance to win some money or maybe some prizes by being vaccinated. But I think one thing I must caution is that it looks like their vaccination rates are stabilizing at around 50% because there are a proportion of the population that is not so receptive towards vaccination rates. And I think, as always, the challenge is to get the last 30-40% of the people vaccinated, because I think maybe these people, they are maybe a bit more concerned about vaccination, and as a result, even with these incentives, they may not be so effective. And the US now is reaching a bit of a plateau in terms of its vaccination drive, and in fact, Asia is catching up. So right now, many parts of Asia may be ranked lower than the US, but maybe in 6 months' time, the challenge may be that will the US suffer from another outbreak from the Delta variant, for instance, because that has really started to increase the number of cases in the UK. So this could mean that this kind of rankings do shift over time and rise and fall according to the season.
Yeah, and I believe so because Pfizer already started its own plant in Singapore, right? So I think that Asia part of you will be having more and more vaccine that is actually available for everyone.
Yes.
Yeah. Okay, so what's next that you have for us?
Sure, thanks. So I think now looking at our Prime Minister Lee's thoughts on the same day, 31st of May. So I think this is the vaccination strategy going forward. I think Singapore wants to vaccinate the population more quickly. Most recently, we also announced that we want to vaccinate 2/3 of the population by National Day. So the strategy now for Singapore going forward is to test, to trace, to vaccinate, and to do this more extensively and more quickly. So I think just a very quick recap of our vaccination drives. I think we started our vaccination at the start of the year, where the frontliners as well as those aged 70 and above started vaccination, and progressively, where I think supplies were being allocated, Singapore was able to extend the vaccination towards more groups of the population. So if you look at the chart on the right, where I have put the resident population kind of demographic structure. So right now we have already opened up, the vaccination drive to almost all groups of the population whenever possible, because we still don't have the go-ahead to vaccinate children who are below 12. So right now they are, as you can see from the chart, they are in red, but the rest of the vaccination drive is undergoing, with I think many age groups above 60. I think they are at least about 70% vaccinated, and the rest of the population progressively getting vaccinated as well. And I think it's really a positive that Singapore, at least 50% of the population at least have one shot in the arm, and I think progressing quite well in July and August towards the goal of having 2/3 vaccinated by National Day. So I think one thing before we conclude on this, this segment, I think what we want to point towards this is that there's also, definitely a lot of correlation between the lockdowns or the circuit breakers and how the community is moving around. Because if you look at the chart on that's presented here, During the circuit breaker periods, the activity levels for most Singaporeans in fact plummeted and progressively improved throughout the different phases before coming off again as the phase 2 heightened alert was being introduced. So I think what we've observed is that compared to pre-pandemic levels in 2019, there were more people going for grocery and supermarket shopping, but for retail, for transport, for workplaces, they continue to be much lower, about 25 to 40% lower than the pre-COVID-19 levels, due to the fact that work from home, for instance, continues to be the default. And I think as vaccination rates rise, I think we could look towards improving more of these activity levels, which will then benefit the economy. Which brings me to the next point about the Singapore's economic outlook for the first half, or the trends for the first half of 2021.
Okay, so it seems that really there's a correlation pertaining to how the economy will go, and as long as we got vaccinated, there's no more lockdown, the economy just continue on, right? Actually, we already have 2 questions from the floor, but we'll attend to that later. And right now it's quiz time for everyone. So the question is, what is Singapore's vaccination goal by National Day? Okay, if you hear what Jeff mentioned just now, I'm pretty sure you know the answer. If you know it, just comment down into the comment box itself. We'll be announcing the lucky winner later on, okay? So is it A, 50%, B, 67%, or C, 100%, okay? All right, let's move on to the next thing that you'd like to share with us today.
Okay, thank you. So the second part of my presentation talks about the recent performance of the Singapore economy. Because we do have data up to perhaps April to May of this year, so what we can see is some trends. So for instance, I think one thing that's really striking is that the economy is continuing to look pretty resilient, and performance has been quite encouraging. I think if you look at the kind of GDP growth and economic activity levels, in fact, if you look at the chart on the left, we are close to the COVID pre-pandemic levels, where you look at the bars on that is in brown. I think they are very near levels that are in 2019 already, due to the fact that I think the economy recovered relatively quickly in the first quarter of 2021. In fact, most analysts, including myself, was expecting a decrease in compared to the previous years in terms of the first quarter performance, but the economy, in fact, surprised with a 1.3% year-on-year growth, which means that the economy expanded from the first quarter of 2020. And I think that's a really good gauge in terms of how the economy is doing, because if you recall what happened in the first quarter of 2020, the economy was still not that much affected in terms of the COVID-19 outbreak. I think people were still going for some domestic holidays and still going on their daily activities pretty okay before, I think, the circuit breaker that was introduced from April to June last year. However, I think the recovery looks a bit K-shaped. And why K-shaped? Because some parts of the economy is on the up, which is the upward pointing part of the K. But some parts of the economy is still pointing down. So, which is why economists like myself have termed this recovery a K-shaped recovery. If you look at the sector performance, so even though the economy as a whole grew 1.3% on a year-on-year basis, but if you look at manufacturing, for example, and modern services like the information and communication sector, the finance and insurance sectors, they are seeing quite healthy growth rates between 5 to 10%. Whereas I think if you look at the other sectors like construction, down by more than 20%. And also transport and storage, mainly affected by air transport because there's no air travel, down by 16.5% on a year-on-year basis. So it reflects the fact that some of the sectors, they are able to cope with all these safe distancing measures, able to work from home, and I think able to cope with all this volatility and maybe find opportunities in them. In fact, they are doing better than last year. But the fact is that some of these sectors are struggling with, for example, manpower shortages in the construction sector, and also I think in the transport and storage segment, suffering from the lack of air travel. So that continues to shows the downside for the first quarter performance, which is quite reflective of what the economic trend is for today. A large part of the resilience, I believe, we should attribute it to the government's fiscal policies. The government has spent around 100 billion over the past budgets, five budgets in 2020, and also having more in 2021 to support the economy through these tough times. In fact, the Central Bank of Singapore, the Monetary Authority of Singapore, did estimate that all this expansionary government spending, fiscal measures, they call it, supported the economy by 5.5 percentage points. So if the government did not spend all this money, we could have seen the GDP growth fall by maybe 12-13% last year. But last year it only fell by slightly more than 5% on a year-on-year basis. And I think there's also some support from monetary policy, so I think that helped to push GDP growth a bit higher. However, I think, of course, all these measures were unable to cope with the weight of the COVID-19 and the lockdown, the reduced economic activity levels that Singapore suffered as a result, which is why I think even though there's a lot of bad news, but there's still plenty of positives to take from this.
Okay, so I think that things are really moving quite well, yeah? Let's take a look. What happened to retail?
Yes, so let's have a zoom in on some of the sectors that we are maybe most in touch and familiar with, like consumer spending. So I think if we look at and recap the recent performances in retail sales, what we've observed was that even some of the growth rates are phenomenal. Like you see retail sales in April growing by more than 50% on a year-on-year basis. So what I've done here is I've normalized it, because if you recall last year in April, what happened was the circuit breaker. So there wasn't much activity levels going on, wasn't much shopping. So this year's rate is definitely looking quite inflated compared to the levels last year. But I think if you just look at the levels and put the pre-pandemic level as 100, and I think looking at the plunge in 2020 and the recovery, I think what we can see is that retail sales now continue to be maybe about 10% lower in terms of levels compared to the pre-pandemic levels in 2019. And before that, I think it looks pretty flat without much spending over or without much growth in terms of the spending over the many years that had come along. So there's been some recovery, and we are now about 5-10% lower than the pre-pandemic levels. But I think it will still likely be a relatively diverse set of performances. For instance, the food and beverage sector, they are about 40% down in terms of the activity levels. And I think going forward, the concern may still be that in terms of the levels still be pretty low due to the fact that I think we still can't resume dining in on a normalized basis even when we start to sort of like loosen up some of the restrictions. And even if we do so, maybe the capacity of these restaurants may not be 100%. So the outlook for some segments continues to dampen on the overall retail sales growth. But that's not to say that all is bad for consumer spending. I think what we observed is that there has been some positives, because if you look at spending in discretionary items, and by discretionary items, what I mean is things that you may not need but you decide to get, like maybe your sports shoes or maybe your clothing or computers, mobile phones. I think we saw some positives from all these discretionary spending at the start of this year. I mean, if you look at supermarkets, everyone rushed to the supermarkets during April, but that's starting to come off. And in contrast, I think a lot of the spending on the computers, the watches, and the recreational goods fell and collapsed in the middle of last year. but they are now steadily growing. And for example, in the case of computers and telecommunications, they're in fact higher than pre-pandemic levels in 2019. So I've normalized this chart to 2019. Is equal to 100 to show that anything above 100 means that we are higher than pre-pandemic levels, and anything lower is still lower than pre-pandemic levels, and we do see some positives for some segments ahead.
So a tip for all our friends right here is potentially can go into recreational goods. And I think all these are things like bicycle, wellness and all that, right? You know what, Jeff, recently there's this competition organized by OCBC Bank, and they're talking about this cycling contest, right? And everyone has to pay $100 as a so-called sign-up fee, you know. And guess what? The whole competition itself got fully sold out in less than 2 months.
Wow.
It's crazy. I think that everyone is really like more cautious into health, wellness due to all these kind of pandemic item. And so potentially these are the areas that people who are affected, like example in tourism industry, can go into and look into it as well, right?
Yes, indeed. I think, in fact, if you look at like COVID-19 pandemic, they've definitely shaped, you know, our life and our lifestyles and perhaps our spending habits as well. So I think if you look at some of the anecdotal news in Singapore, we do see more people biking, more people exercising, so investing in maybe the equipment. And also I think with now, for example, scanning of QR codes now the norm compared to, let's say, 2 years ago when maybe many of us do not know how to do that. So maybe people are feeling that they need to invest in a better phone or better equipment to deal with the new normal.
Okay, and what else do we have? Property. Oh, this is actually another hot topic for everyone.
Yes, yes, in fact. So I think all this sort of like changes in how we function in post-pandemic, I think it's also impacting on the real estate sector. So I think if we look at like the property prices indices, and as usual, we compare to pre-pandemic levels as with 2019 equal to 100, and anything above 100 means that it's better than pre-pandemic levels, and anything lower means it's still weaker. So we can see that most of the segments for property have been coming off lower, and that's especially so for offices, because work from home continues to be the default mode, which is why I think office prices have been coming off since 2020, and the trend has continued. I think going forward, we expect some recovery as the vaccination rates rise, and as I think the restrictions are gradually being loosened up. So that could help to improve a bit of the property price indices for the various segments like retail, like shop, and like industrial, at least for the 2021 and 2022. I think one line that's missing here is, of course, the residential market, and that's really on the high because of maybe the shortages in construction, which is limiting supply. So that's helped to increase the property price index compared to the pre-pandemic levels.
You know what, Jeff, recently, right, especially since end of last year and early this year, even for my circle of friends, right, I know a few of them are really like going down to all the show flat. I think because too bored, is it? Not too sure, is it because of that? So they've been like house shopping, condo shopping, or show flat shopping in a way. And quite a fair bit of them actually start buying property, second property and stuff. But I know that prices are going up just because of this force factor, because there's not enough workers, so-called launches are getting slower and all that, right? But will this like kind of extend, or is it a good move now to even buy, because there's not many workers nowadays in Singapore, and there's more and more trend that people start to outsource their work overseas, or people who, I know of a few people, they're Malaysians, and due to COVID-19 they can't come back to Singapore, and since everyone work from home, they just work from home from their house in Malaysia. So is it still a right thing to kind of like hop around and shop around for property right now, especially like second or third property in a way?
Yeah, I think the short answer is really it depends, because it really depends on the individual's needs and whether they need some spaces. I believe that the recent increase in property prices is both a combination of demand and supply. Supply, I think, as mentioned, there's shortages in construction activity for workers, I think leading to delays in projects. So I think with anything when the supply is being constrained, prices tend to head up a little bit. At the same time, I think what we've also noticed is that demand is on the up because of the fact that people feel that maybe they need a bigger space for their home office. At the same time, maybe they feel that with the pandemic now limiting you to home, you may need a bigger space than before to carry on your daily activities. Maybe get a home bike or something to exercise. So yeah, so I think definitely there's going to be some changes in terms of the individual's lifestyle. So that may mean that you may want to get the right property for yourself. But I think having said that, something I'll mention later is also on the threat of higher US interest rates that may also weigh on domestic interest rates as well. So that may also weigh on whether your considerations, whether you want to purchase more property ahead. And I think another factor that I want to carry on with this real estate sector is that I think there's likely to be decentralization, because if you look at, let's say, the chart on the right-hand side, so this time around we are comparing year-on-year growth, so growth compared to the previous year. And I think what we notice is that the central offices prices are decreasing because of the pandemic. But something very interesting is that the office prices at the fringe of the island, in the fringe of Singapore, I think they are seeing a rebound because of the increased demand for offices across the island.
I strongly agree. Look at here. We are at Wisma Geylang Serai, right? We're near Paya Lebar. And you look at Paya Lebar quarter, it's like so fully packed. And versus Orchard Road. And all the offices here are like bustling, the shopping centers, the SingPost and all. Yep. So it seems like the trend really shifting out of the whole CBD, right?
Yes, I think Singapore has been pursuing a strategy where they try to have regional centers like Jurong, Woodlands, and Paya Lebar, I think being one of them. And I think COVID-19 has helped to accelerate some of these trends. So moving into the next point about inflation, I think inflation may be a hot topic for many of us who may feel that the cost of living is getting more and more expensive. And I think we look at now what is driving the headline inflation print, because last week news have came out that the headline inflation grew by 2.4%, and this is highest that was being seen since 2013, which is like 8 years ago. So many may feel that, okay, now what's wrong with prices? Are they going to run away at this point of time? So let's have a look into some of this. So as mentioned, even though headline inflation is at 2.4%, but for the month of May, but I think what we've got to notice is that we take the average between January and May in terms of the average percentage in terms of the year-on-year, and we compare, and we see that there's not many components of inflation that's above 2% at the moment, and there's only one component that is strongly exceeding that 2% at the moment, which is transport. And transport, of course, is a very important part for our daily expenses, because if you look at the CPI basket, so the CPI basket is the consumer price index basket, which for the average Singaporean, if you have $100, you spend $25 on housing and utilities, $21 on food, $17 on transport, and so on and so forth. So because transport is an important part in terms of all of our spending, which is almost 1/5 of our spending. So having transport prices and inflation higher compared to previous years, I think that's affecting the headline inflation print at the moment. So taking a deeper dive into transport inflation, so what's driving transport inflation? And what I see is two factors. So one, the oil prices are elevated, because if you remember what happened last year, there were news reports saying that the international oil prices was zero or even below zero because nobody wants them. There was oversupply because nothing is moving. But at this moment, the Brent prices, the WTI prices, they're above $70 per barrel. So having this contrast, which is much higher than the lows of 20 to 40 last year, I think does spill over to the higher oil kind of energy inflation for Singapore, because we do use a lot of energy for petrol and also for utilities. At the same time, I think if you look at the COE premiums, I think some of the numbers that you have been seeing so far, the Cat A, Cat B, Cat E, all rising by quite a lot. That's a bit of a function because of how the system has been programmed. Because all these COE are over a duration of 10 years. So between 2010 to about 2015, that's where the supply of the COEs was lower compared to the period of 2016 to 2019. So by 2020, 2021, because there's less COEs being carried forward from 10 years ago. So right now, because of this, if you look at the chart on the right-hand side, the COE premiums are rising because of the fact that the quota, which is the blue color line, is falling towards maybe less than 4,000 a month being released. So which is why having a lower supply is causing, for example, car prices to increase by almost 20% year on year, and motorcycles by maybe more than 30% year on year.
But would anyone wants to buy car nowadays? We can't even go much anywhere. We just have to stay at home. And just like you were sharing with me as well, your car has been only used like once for last month. Who would still want to buy a car
So
nowadays?
I think it also depends on the individual's needs and preferences, because COVID has definitely shifted kind of transportation patterns. I think for one, maybe individuals do not travel so much by themselves because of all these restrictions. But at the same time, I think delivery is increasing. So maybe that's where, for example, the demand for motorcycles have been increasing. So as a summary, I think what's driving inflation right now is mainly because of the higher petrol prices as well as the car and motorcycle prices. And it's really also a shift compared to the previously lower housing prices. Because I think for a few years now, we were concerned about the kind of depreciation in terms of decaying leases for HDB flats, for example. But now, because of the reduced supply for flats, the delays in BTOs, I think that has also caused accommodation inflation to be slightly higher. But for most other items, I don't think they are facing a lot of inflation at the moment. So perhaps we may not need to be so scared. All right, so moving to our last part where we share our outlook ahead, I'd like to share with you 3 trends where we think could be the driving trends for Singapore, at least for the third quarter and beyond. So I think just to quote Minister of Trade and Industry Gan Kim Yong on the 10th of June 2021, in the immediate future, I think over the next couple of weeks, our focus is on opening up our local community and restarting our economy, allowing more people to gather and allowing dining in to commence. I think that's also a consequence of higher vaccination rates, and I think the progress Singapore has made if we recap what has happened over the first half of 2021. And the first trend I'd like to highlight is that from the external, because Singapore continues to be a small and open economy, there's still a lot of opportunities and trends. If you look at the chart on the left-hand side, like I mentioned, a lot of the major economies like the US, China, and Eurozone, they are starting to get a grip on COVID-19. Or for China's case, they have been handling COVID-19 relatively well since the start of the pandemic. So the non-manufacturing and services PMIs, we have been more badly hit and more affected by all these COVID-19 restrictions. They're starting to look very positive now. And I think that's going to mean that there could be more demand, external demand for Singapore, demand for goods and services from Singapore. So I think that's going to be a positive for the Singapore economy going forward. I think one flagship challenge in contrast that I see is rising input prices, because if you look at one of the major global trends, that's that factory prices are rising by quite a fair bit. In terms of the year-on-year percent, they are about 8 to 10% on a year-on-year basis. And I think when prices of inputs gets more expensive, like for example, when the computer chip semiconductors that's going into the handphones, going to the cars, I think if that's going to get more expensive, there's definitely going to be some concerns that the price of the cars or the mobile phones will get more expensive as well.
And I think eggs also. Eggs and tomato from Malaysia recently increased in price just because not enough worker. Everyone is in a lockdown mode in Malaysia, and at the same time, transport is getting more and more expensive. So it seems like it will still somehow or other will affect our life, right?
I think to some extent, we like I mentioned, we may need to be a bit more concerned about inflation, but I don't think we need to get too concerned. In fact, for food inflation, compared to last year, I think things look pretty well because Singapore has been able to gather inputs from various sources. I think that's helping to limit a bit of the food inflation compared to that of last year. Although I think global food prices, as you mentioned, they are on the uptrend, and it may hit Singapore with a lag. So that's something that we watch quite closely.
I realized that my favorite bak chor mee also increased price recently.
Absolutely. So I think going to our next point about what we think of the economy. So maybe over the next few months, what we can see in terms of the year-on-year growth rates, because we are comparing to the circuit breaker period. So anything is going to look very nice. So you may see retail sales growing on 50% year-on-year. You can see maybe oil exports like growing on a 100% year-on-year basis. But I think very soon, I think this base effects will start to taper off. Even though I think Singapore's case, underlying demand is still there. Worldwide, I think the demand for Singapore's major exporting products like electronics, biomedical manufacturing, and also like precision engineering items, they all still look pretty strong because of the shortages in various segments. So even though things may not look so good on a number basis, but I think things are looking relatively healthy in some sectors, and these are the opportunities that we'll have ahead. So we will likely pivot to the medium-term growth drivers. So after the low-hanging fruit of improving economic activity levels, I think what we will look to is, for example, all the government's initiatives, like what we have been focusing on for this year's fiscal year budget, where we look at the medium term, how to survive in a post-COVID-19 world. So I think some of these include like skills, so upgrading your skills, innovation and digitization, so enabling technology more on a day-to-day basis, as well as the green plan. So for example, Singapore's goal to be able to have 30% of the food locally sourced by 2030, compared to less than 10% today.
So actually, I do see these three pillars as something that really can help the society. I know of a few SMEs, right? In the past, they used to do very well in their business, but due to COVID-19, things are not moving, right? They actually start to sell gadgets. Some of them are selling gadgets, of course, some of them are selling masks, sanitizer and stuff. And some of them went into starting their own courses, like WSQ or SkillsFuture courses, and they do quite well. And some of my friends actually really pivoted into the green plan. So the world first, not Singapore only, world first so-called plant-based meat, right? Mock meat is actually my friend's alliance. Yeah, so things are really, people are capturing all these kind of opportunity, right? What do you think Singapore can leverage on this year, especially like second half? Now we are going to the new year. What are some of the things that we can potentially try to put our luck into?
I think there's definitely changing trends as mentioned. For example, even for myself, I've looked at some of the going to some of the farms to source like my daily or my weekly grocery trips. So I think going forward, there will be increased demand for maybe more high-tech hydroponics farm. There's also increased demand for, let's say, Singapore as a data center. So keeping data in Singapore, where with more and more, let's say, data in cloud storage, the demand for all these centers will definitely rise, even though as a consequence, I think there will also be increased power demand for these companies as well.
I agree actually, because recently I start to go into this thing called data protection due to my services that I offer to the client, and I start to realize that there are actually more and more jobs hiring about like legal personnel or counsel or advisor in terms of data protection and stuff. I think really innovation and digitalization is something that we are moving forward. And surprisingly, Singapore is one of the pioneer in PDPA, Personal Data Protection Act, compared to something that's in Europe called GDPR. And in the whole Asia, Singapore is the first. So I think we can leverage on something that is really closer to our heart and our industry itself to kind of serve the global market as well, right?
Yes, absolutely.
Yeah, cool. So that's another tip for you, data protection. All right, so what's next? Yeah.
All right, so just to share our house view for 2021 and 2022. So
this from Hong Leong Bank, right?
Yes.
The source got cut out. Yeah, so all these are some forecasts from Hong Leong Bank itself.
Yes.
Yeah.
So, like I said, maybe the second quarter we would see GDP growth at very strong numbers, 15%, more than 15% year-on-year basis. But that's because of the circuit breaker period last year. But I think near-term wise, the economy is likely to have had some setback in the second quarter because of the restrictions that were put in place. But I think that also helped us to be placed in a very strong position towards the second half of the year. So we expect growth to be relatively elevated at 6.3% in 2021 and normalizing to still a respectable 3.5% in 2022. For inflation, I think the energy prices have been relatively high, but I think they may start to stabilize and come off. And anyway, the base effects will likely turn. So that may mean that the inflation rate comes off. So we are kind of expecting about 1.3, maybe with some upside to 1.5% for headline inflation this year, and then 1% inflation for next year. And meanwhile, at the same time, for core inflation, I think still looking relatively subdued at 0.8% this year, and then 1% next year. For core inflation, it actually excludes the private transport and also on accommodation, because that's the items that you spend every day compared to the lump sum items. So that's maybe a more accurate reflection of how the situation is in Singapore. And finally, I think I just want to point out the threat of higher interest, US interest rates that may come in the coming years, maybe not today. So I think what has changed over the past month, which has been spoking a bit of financial market, is that because the US Federal Reserve, the central bank in the US, they met and now they are starting to expect higher interest rates in the US by 2023. So that may mean that the US starts to increase interest rates in 2023, or maybe if things go well in 2022. And before that, they will really start to taper their asset purchase program. So this means that they will already kind of limit the spending and the accommodation that they have to support the US economy. Because now it's doing so well, the vaccination rate is higher compared to others. So maybe they can start to look to return back to normality faster than other parts of the world. So Singapore interest rates are somewhat correlated with US interest rates, as you can see from the chart here. So the FFTR upper and lower is the policy rate, so how the range that the US FOMC set every meeting, and the LIBOR rates, the 3M LIBOR, which is the 3-month LIBOR in red, that's the US interest rate, and the 3M SIBOR signifies the 3-month SIBOR in blue, light blue. So the LIBOR and the SIBOR rates do correlate with each other. So with higher US rates, Singapore rates may go a bit higher as well. But I think that's not imminent for now. That's maybe a 2022, late 2022 to 2023 story for now.
So that means if I buy a house now, maybe next year I have to pay more.
So that's perhaps one thing you need to be a bit aware of, because when you fix your interest rate, or when you get your home loan, when you get a mortgage loan, yes, you may start to be a bit more wary that there could be threat that US interest rates rise, causing Singapore rates to also rise by 2022, 2023.
Okay, so what's happening in the forex market then?
Yeah, so just to wrap up a little bit in terms of all these financial markets continue to look very volatile, but there's definitely a lot of gains and losses so far. As you can see, I think so far since the start of the year, I think US stocks continue to rise, and I think since the US central bank kind of latest decision, I think they have already started to caused the Sing dollar to weaken a little bit compared to the US dollar, I think, so far. So, but I think we don't expect too much weaknesses in the dollar Sing rate. So we expect something like about 1.33, 1.32 for the end of this year and the middle of next year, respectively, with maybe the Monetary Authority of Singapore looking to normalize policy soon as well.
Okay, well, that indeed is actually a lot of chunk of information. So I kind of get a quick insights on a few things that you mentioned just now. And right now, let's attend to some of the questions by the floor itself. So for the first question here by Dave is, oh, Dave has a few questions here. Okay, let's start with the first one first. So from Vanessa first. So Vanessa actually asked that, do you think that the economy will recover by 2021, end of 2021?
So if we look at the GDP levels overall, we are already close to pre-pandemic levels overall. So some sectors had grown during this period, some sectors have shrunk. In fact, if we seasonally adjust them, they are even higher than pre-pandemic levels. So we are looking very close towards surpassing this level by the second half of this year. So yeah, the overall on a macro level, the whole economy is well positioned.
So you feel that it will go back to normal? All right, great. Okay, the second question here from Dave. It seems inflation is going up. Should we be concerned? What should we take note and how should we deal with the rising inflation? Yeah.
Okay, so the general gist from what I've explained just now is that inflation is a bit of a concern, but it's not too much of a concern. Right now, energy prices are quite high and the car prices are high. But I think if we look at maybe the second half of the year, the kind of growth rates will start to come off because last year was the year where economic activities were disrupted and the prices were very low. So yeah, we don't expect the inflation rates to be too high over the next 18 months.
Yeah, so things will normalize, right, after all. Okay, all right, so there's a question by Chiu from oil and gas. In the oil and gas industry, she's actually asking, generally in Singapore and globally, what's your comment about the oil and gas industry?
Yeah, I think the oil and gas industry is relatively positive at this stage because of the increased prices. Of course, I think it depends on the kind of operations because some of them in the sort of like the downstream, they may be impacted by all these rising input prices. But I think upstream is looking pretty good because of the fact that prices are so high, so they can make quite a good margin. Yeah, so a lot will depend, for example, on the OPEC meeting that is upcoming. But I will expect that, compared to the lows in 2020, the whole sector looks much healthier and in a better shape. And I think the stock prices in the US have also reflected that.
True enough. Okay, and last question from the floor here, from Dave again. So the question is, what is your take in digital assets and cryptocurrency? We talk about innovations and all that, right? So will digital assets and cryptocurrency be the currency for the future? And what should we take note and what advice do you have for us?
Okay, I think for digital currencies, cryptocurrencies, it's becoming an integral part of even some of the institutional investors, some of the asset and wealth managers. So in other words, it's becoming a bit more mainstream compared to maybe 2-3 years ago where people were dismissing it. Of course, I think one challenge is that a lot of the price movements, because there may not be anything to peg to. So it's like, for example, oil, you need to use it, you know the value, and you can maybe perhaps better gauge the value. But for cryptocurrencies, it's also a little bit generated by, expectations of demand and supply, and that's why the prices have been so volatile going forward. But I think governments are also entering this space. So I think one thing I'll watch for is on regulation. Yeah.
All right. Yeah. So now we come to the last 1 minute itself, right? Jeff, would you mind to give us a small little recap? What do we take note for the next half of the year?
Okay, sure. So I think, as I've shared, I think the first point I want to make is that rising vaccination rates do help to improve on economic activity levels. Second point is on Singapore coming from a position of strength in the first half of this year. And thirdly, I think we can expect economic levels to be even higher than pre-pandemic levels by the second half. But of course, there's still some of the sectors that's still languishing behind. And I think they still need some support.
Yeah, and a small little recap as well. I think the green plan is something that has a lot of opportunity for all of us. And the second one is the innovation part, right? The recreation stuff, wellness related item, and lastly, skills-based education, right?
Absolutely.
Yeah, so I think that's already 5 things enough for us to choose from for your new career or your new business, yeah? All right, yeah, so thank you so much, Jeff, for tonight. It's indeed a very pleasant one that we are having right here. And thank you so much as well. And also for all our friends, do take note, take care as well. And if you have benefited, do continue to like and share our video so more people can actually see the valuable content brought to you by Geylang-Serai Virtual CC. So thank you, Jeff, once again. And we would like to bid goodbye to everyone. Thank you and stay safe.
Thank you.